This is Rod White for Mining Network, and today I'm very pleased to have with me Mark Selby, the CEO of Canada Nickel. And Canada Nickel is rather in the news in the beginning of 2024. This past week, Agnico Eagle took a 12% stake in Canada Nickel, which can be extended to 15.7%. And Canada Nickel raised the money, 24 million, at $1.77. So the shares are now 140, which is valuing Canada Nickel at 200 million. But the interesting thing to me is that Agnico Eagle is a $26 billion company, and its name, Agnico, comes from silver, nickel, and cobalt. And Canada Nickel has quite a lot of nickel, copper, and cobalt. So, Mark, this could be a really big year for Canada Nickel. What do you think for 24?
Oh, no, for sure. I mean, we hit a major milestone at the end of the year with the publishing of the feasibility study on Crawford. And, as exciting as that was, what, we were really excited about going forward is the fact that, we've got 20 plus properties, 11 of them bigger than Crawford. And we think we're in the process of unlocking what will be the world's largest nickel sulfide district based on what we can see so far in the geophysics, and having Agnico Eagle come in for a major endorsement investment like this one, to give us, it was all flow through dollars that they've invested with us. And so that gives us a big pile of cash in 2024 to really unlock and demonstrate, the potential to multiply the already large nickel reserve and resource. Crawford is already the second largest nickel reserve and resource globally today. And so the potential to multiply that as the year goes on with this funding from, the largest mining company in Canada is Agnico, and so to have them provide that capital to allow us to do that exploration is a great start to the year. And through the course of the year, we'll be getting the next permitting milestone done on Crawford. We'll look to get our full financing package together with our advisors at Scotia, Deutsche Bank, and Cutfield Freeman. And so, it's been a very exciting 4+ years to date since we started drilling hole 5 in September of 2019. And I think 2024 will be the best year yet for us.
Yeah, I think what's important is that Agnico Eagle don't really make many mistakes. I think their business strategy is one of the best in North America. And when I was young, I met Paul Penner a few times, and he was a great man. And I remember way back then that in the beginning they were cobalt, silver, and nickel miner. That's their history, and they are not making an accident by buying into Canada Nickel, because they're buying a stake, which on the exercise of options is going to give them 15.7% in a company with one project out of 20, which has a net present value of $2.5 billion. So, and you've got a capitalization of 200 million, and you've got, with the support, we mustn't forget Anglo American, they've got 9%. So you've got two of the world's premier mining companies have endorsed you. And why have they done that? Partly it's your charm, but I think mostly it is nickel sulfide. Nickel sulfide is in short supply, and nickel in Canada always has been, for nickel sulfide, the leading producer. So what do you think about nickel? Because people don't distinguish between nickel sulfides and nickel laterites.
No, well, first off, in general with the nickel market, I saw this in the early 2000s when I was with Inco. People always underestimate nickel demand growth, and the same thing happening again today. The first 3 years of this decade, nickel demand growth has grown at 9% a year, and we're just getting into the nickel-heavy demand growth from the EV sector, and so that's not going to slow down as the decade goes on. But as you highlighted, there's a really fundamental difference, in terms of nickel supply. More than 100% of the supply growth since 2015 has all come from a Chinese-controlled nickel supply in either Indonesia or produced in China from Indonesia and Filipino ore. That comes with a massive carbon footprint. You're talking about 50 to 80 tons of CO2 for each ton of nickel produced. And so, again, Elon Musk didn't set out 20 years ago to, recast transportation with electric vehicles to end up using a bunch of really high carbon nickel, for those electric vehicles. And so nickel sulfides inherently, tend to be lower carbon. For deposits like ours, which are in a place like Ontario, where we have access to very low carbon electricity from the grid, because most of the grid power here in Ontario is nuclear and hydroelectric, we can design a very low footprint operation to start with. And then these types of nickel deposits that we've got with Crawford and all of the deposits that we've got in the Timmins district have this wonderful property that they're hosted in rock, that when it's exposed to air, it spontaneously absorbs CO2. And we developed a proprietary process, which we call IPT carbonation, where as the material is going through the mill, we can inject high-strength CO2 and effectively capture and store that CO2 as it's going through the process plant. So, in addition to being, the largest nickel sulfide operation outside of Russia and China, we would be one of the largest carbon storage facilities in Canada. So, in today's world, being able to hit both of those themes in a pretty material way, I think is a really important for investors. And again, people I think have underestimated that dimension of the story so far.
I don't think it's just that. We're talking about critical metals here, nickel and copper. North America is ridiculously short of these critical metals. And with the geopolitical situation globally, nobody's going to be buying the nickel from Russia, as far as I can see. China's got its nickel supply sorted through laterites, and it's got the technology for it. But for North America and Europe, nickel sulfides are a pressing need. And when you're a critical metal, the government is very supportive. And you get 30% rebate on what you're spending in the ground in exploration, but you could get up to 60% by creating this clean company with the carbon storage. Am I guiding in the right way?
Yes. Yeah. So for for most of our capital expenditures, as a critical mineral, we get 30 cents on the dollar back from the federal government. And then any dollars that's invested in the carbon capture and storage facility, which is effectively our entire mill facility, we think we'll get 50 cents on the dollar out of that back. And so, just in our fees, just those two tax credits alone are work out to over $1 billion over the life of the project in tax credits that come in. Then in addition to that, you've got a bunch of one-off programs that the federal government has implemented. So you have what's called the Canada Growth Fund, which is focused on decarbonization and energy transition. So we tick the boxes in both of those cases. There's a Critical Minerals Infrastructure Fund. So anything that's road, rail, power, and so forth, any infrastructure dimension of the project, that will qualify for grant money from that particular fund. And then there's the Strategic Innovation Fund that we would also qualify for. That's just at the federal Canadian government level. Then we have, the province. Ontario is one of the few places in the world where we both make cars and mine minerals. And so they're very focused on getting a mine to EV supply chain built in the province. And they've been providing roughly about 10% of the capital for various projects in various forms of government support. So, we'll expect to see similar amounts from the Ontario government, particularly, as our local MPP is the Minister of Mines, George Peary, and he's been very supportive of the project so far. And then as well, we also qualify for U.S. Department of Defense funding as an ally of the United States, supplying critical minerals, to the United States. I was one of 6 companies that was invited last June during the benchmark conference to sit with several of the key senior administration officials to talk about critical minerals and what else they can do. So, we are on the U.S. radar, and so again, between that set of government funding sources, we would be, I think, disappointed if in terms of the $2 billion of capital and the $800 million so of equity, we were expecting about half of that equity check to come from government sources, and on the debt side. Again, there's a whole series of programs there, and we expect most of the debt to come from government agencies of one shape or another.
I think it goes further than that, really, because with nickel, the demand from automakers and other industries in America is quite extreme. And you're not going to be able to compete against China in EVs unless you've got the offtake agreements. And for Canada Nickel, with the Crawford project, it's the most advanced nickel sulfide project in the world. And then you've got Dumont in Canada as well, which you were once a very keen supporter of. But what I think is going to happen, and I'm of a certain age to have experienced the Poseidon boom, nickel doesn't move in like any normal metal. When there's a boom in nickel, there's an exceptional rise in the price. And this makes a lot of difference with your bankable feasibility study as to the price you're using, and also for the critical element, metal element, and the carbon storage. This company is very virtuous. And Agnico Eagle did considerable due diligence on Canada Nickel before they invested. Your chairman was a professional. He was a CFO at Agnico for some years. George Perry, the mines minister, was at Kirkland Lake before Agnico took the company over, and he became a politician. There's very, very strong support for Canada Nickel and its aspirations. Now, the other thing we should look at is on building a nickel company, you are in Ontario, technically in the Abitibi, near to Timmins. The infrastructure, the jurisdiction, firstly, for off-takers, the first thing they want to know is that the management competence, and then they look at the jurisdiction, the tax rates and the government support, and then they look at the infrastructure, where they're going to get the workforce from, where they're going to get the power from. Can you just run us through the advantages that Canada Nickel has got in these respects?
Yeah, no, that's one of the key strengths of the projects we have and the company. We're literally located next to a highway. We've got multiple power lines that cross the property. We have a rail line that stops about 15 kilometers short that we will be extending into the project site. And most importantly, we've got about 60,000 people who live in a handful of communities less than 1 hour's drive from the mine site itself. So, unlike many projects today, if you look in the copper space, most of the big projects are in remote locations somewhere along the Andes between Panama and southern Chile. And so, in those projects, you're spending billions of dollars just to build the infrastructure to start building the mine. In our case, we have all of that infrastructure right there. In fact, we need to spend a little bit of money to move some of it out of the way, which is a good problem to have. But all of those new mining projects have these fly-in, fly-out workforces that they're continually competing against all of the other fly-in, fly-out operations globally. We'll be one of the few big new mining operations that'll have a workforce that can drive home every night. And that has a massive benefit from a cost perspective and a massive benefit from a productivity perspective. So, again, I think, the the location and infrastructure of a project does not get nearly as much focus, as it should in terms of fundamental value creation lever for a mining project.
Right. So people that want nickel sulfide, they're going to come to you. And it's not just the Crawford project. When one looks at Canada Nickel, and I should disclose I'm a shareholder, when one looks at Canada Nickel, you actually have got a bunch of projects, including you've got some quite high-grade projects and some rather large projects. And this is not moose pasture. These are real projects that people have spent real money on. So technically, whereas Crawford may take 5, 6, 7 years to get into production, you got Texmont, you got Man, you've got projects that are near surface, they're known. You got tailings at Texmont. This could give an early start, couldn't it? It could deliver initial supplies before Crawford is built.
No, for sure. Again, we've got 11 targets that are bigger than Crawford, that we've just started to drill off. But yeah, most importantly, we've got, high grade near surface at Bannockburn, Texmont, Sothman. And so, particularly at Texmont as a past producing asset with mining leases in place, there's a faster track path to get that into production potentially. So, we'll be getting out resource PA. We're hoping to get that out before year end, but the feasibility study didn't come out till get published till the end of November. So we were busy our technical team head down on that, but we'll have that out in the first part of this year. And again, that gives us great optionality in terms of near term cash flow. Which is always a good thing to have, money coming in at some point. So again, we still need to publish a resource and a PEA, so it's very early stages, but the potential for that asset is definitely there.
I think there's another big differentiator is that when you're developing these high-grade projects, you can use somebody else's mill. You can do toll milling, which means you won't have to build a mill with the enormous capex and the permitting that goes into it to start production. So I think people should understand that.
Oh no, for sure. There's 2 mills in the area that could process the material. So, that is definitely a real opportunity for us.
And it's only 30 to 40 kilometers to truck. I mean, in some other parts of the world, it's hundreds and hundreds of kilometers. But looking ahead, this is the critical year. You've got 2 world-leading mining companies as key shareholders. You've got very great government support. You got your first project with the $2.5 billion ticket on it, and you're $200 million. But what comes next? There must be quite a number of potential off-takers knocking at your door, I would have said.
Oh, most certainly. I'm doing this interview from Korea, and it's not because of the beautiful early January weather that I'm here. And the key piece is, we've had some significant inbound interest from the automobile industry. I think they were caught up with lithium as prices exploded there by 10x. They've now come back to nickel. We've had ongoing discussions the last 4 years with them, but I would say there's a newfound intensity during the end of 2023, because I think they've come back after 2 years focused on lithium and realized, during that time frame, there's really been no new nickel discoveries. There's no new nickel projects. There's 150 lithium projects out there today that didn't exist 5 years ago, but there really have been very, very few new nickel sulfide discoveries. And so, for us to have a project that's already halfway through permitting, would be the largest sulfide operation in the Western world. Again, given today's geopolitics, we need to start using that term again. And so, most importantly, we're IRA compliant because that's a big concern for U.S. automakers. And so, we've got a bunch of people knocking at the door. And I think, as we go through the process with the banks, to sort through who the best offtake and joint venture partners are, it'll be a very, very exciting 2024.
I think so. And that's why I took my money out of lithium and put it into nickel. I think nickel could be the next lithium. But what you're looking at is you're looking at the most important year of your life because you got all the building blocks in place. And in the event that you come in with an off-taker, it totally changes the valuation metric because people then know that Canada Nickel is going to go into production. So I wish you well for 24, and I hope that a number of other shareholders have a look at the company because the price today is 140, but if you get it all together, it multiplies your valuation and it multiplies the valuation of the investment by normal investors. So, Mark, I am sure that with Peter Gadsden of Mining Network, we will be following this story with interest and would like to comment on each chapter of 2024. So thank you.
No, well, thanks for your support and thanks for the opportunity today. And we'll definitely be keeping in touch as the year goes on.